Our next guest has a fascinating background. He comes from a venture capital firm. He is at the intersection of that space and big data with a startup called Adapar that's looking at new ways to capture and normalize and analyze data, and is also steeped in our world of not-for-profits and social good through a project called Impact. As soon as I mention his name in a moment, some of you are going to think, I wonder, is he part of that family? And the answer is yes, he is part of that family. Please join me in welcoming Justin Rockefeller.
Thanks, Tom.
So let's start. We'll get an obvious question out of the way and just bury it, and then we can move on to some more interesting things. You have a grandfather who was Vice President of the United States. You have another grandfather who was a distinguished United States Senator from right here in Illinois, who some of us a long time ago in another century actually covered. Your father is a United States Senator now. You've very consciously, though, chosen not to go into politics and to work at this intersection of capital and finance and data and try and use it for social good. Why?
Well, what I saw I didn't know my great-uncle Nelson, but I knew very well my grandfather and then also, of course, my father. And what I recognize in both of them is every morning they wake up thinking, how am I going to improve the lives of my constituents, right? They think about that throughout the day. They act on it. My father, I can say, at least goes to bed at night thinking about that, and it keeps him up too late. I don't have that, right? And I am fascinated by politics, and I follow it very closely, mostly, by the way, through the NewsHour and PBS. So big plug for PBS. For any millennials who are frustrated with cable news, there is an oasis, and it's called PBS. I studied politics in college and always discussed it around the dinner table, but I grew up reading about innovators and entrepreneurs and inventors, and eventually I just kind of came out as being very, much more interested in those things than any kind of pursuit of political office. So I remain fascinated, but I'm just much more interested in business.
And part of that comes out in your work with the impact, and it's IM capital P pact, implying there's some level of promise. Talk about that a little bit. What is it?
So it's a little play on words off of the Giving Pledge, by which I'm very inspired. And there are some key differences, which I'll discuss. So it's a pact that you make rather than a pledge that you take. So the impact, I guess I'll start with the mission. It's to increase the pace and the probability of solving social problems by facilitating the flow of capital to businesses with measurable social or environmental impact. It's a bit of a mouthful. What it is that we do, so there are 4 parts to the pact, right? There's no cost to make it. It's not a legally binding document. It's a moral pledge. And it is to make impact investments, which we can talk about more, to track the financial returns of those investments, which people do anyway, to measure the social or environmental impact of those investments. And then the 4th, and this is really the kicker, to share those data with others who make the pact. So there's a network effect where the more people participate, the more value you'll have in actually being a member.
Because you've got more data to analyze, more points to look at.
Exactly. And it's worth noting a few differences with the Giving Pledge. Again, I adore the Giving Pledge, but there is a minimum net worth to participate in the Giving Pledge, which is $1 billion. There's none for the impact. You also have to make the pledge publicly on the website. And what we found is that culturally, a lot of our members of the impact wouldn't do that, right? In China, for example, you don't want to stand out too much above the crowd. So they prefer to make the pact among the other members who make the pact rather than just do so publicly. Although we have famous names that you would recognize who have made it publicly as well. And so what we're trying to do is help the field by aggregating all this data and normalizing it around financial returns and also around impact, and people measure different things, so that those who are curious about impact investing but not yet doing so would be more willing to dip their toes in that water, because they will have access to what's working and what's not working already from those who have come before.
But now that's predicated on a notion that almost sounds like it comes out of the VC world, which is, yes, I've got a mission as a nonprofit, and it's a noble cause, it's a huge problem, and I'm going to try to solve it. You're saying that's not enough necessarily, that you've got to have some goals and outcomes in mind, you've got to have specific waypoints and measurements along the way. That's a strange notion for a lot of people in the traditional not-for-profit world.
Well, I think that's changing. However, I do think funders are asking more questions about, what's your measurable impact. And it's only going to help the field and help the organization to try and track things. Some things are difficult to track, right? But the more you err towards that, I think it's going to help the organization in tangential ways. Specifically, I think the field needs this data to be aggregated and normalized, so that when we have enough data, we're going to invite economists and academics to come in and actually analyze this and really tell a compelling story around it, write some white papers, et cetera. But just for the members themselves to have access to the other members' data, I'm not talking about tied to individual names, right? We can anonymize this and
But it's benchmarking, it's seeing that, we're not as effective as some of our peer organizations are at getting volunteers out into the field, or the programs perhaps we're funding as a philanthropy aren't working as well as other people. What are they doing that we're not? How can we borrow those ideas?
Kind of. Close, but it's more around the investing side. So actually tracking the financial returns of various investments, what's working in the field writ large, what's not working, when you look at trends across many different impact investors.
Got it. Remember, social Q&A at MCON14.socialqa.com, or for those of you on the stream, it's right below the screen. You also do work with the Rockefeller Brothers Fund, the family philanthropy. And as we were talking earlier, you said something that struck me as very interesting. You said that part of the philosophy of the fund is first, do no harm. What does that mean?
So this is a 74-year-old foundation whose mission is to basically help nonprofits that are making the world a more just, sustainable, and peaceful place. It was co-founded actually by the person I give the most credit to, going back to an earlier question, that you don't have to go into politics to affect change. As much admiration as I have for those who do. There's David Rockefeller, who had his 99th birthday a week ago today, realized he didn't have to go into politics. But so he and his brothers and later sister, after the naming of it, pooled their resources and started giving to the causes they like. So we have this endowment now built up over 74 years, and it's on the website, it's public information, but it's sizable. It's not $1 billion, but not too far off. We take 6% of that typically and give it to organizations every year. And 94% then is invested. And so I think you gotta think about both. I won't even say halves, right? You gotta think about the 6% and the 94%, and what you do with it. And I sort of start with the premise that what people or organizations or companies do with their money has moral consequences, right? And it is a moral decision. That's commission and omission, right? If you're spending money here or investing money here, you're not spending or saving or doing something else with the money over there. So the endowment and how we invest it, I think, speaks volumes. And we do a lot of work in around climate change, and the way that our endowment was invested before was with a firm, a great firm, but they use commingled funds with their other large clients. And so structurally, we couldn't actually exit positions that were, in some cases, directly contradictory to the work that we were doing, the program work.
We're about climate change, but we're invested in a fossil fuel company over here.
It's hard not to be. As a big pool of money or as an individual investor, it's hard not to be invested in fossil fuels. And we're not in the clear yet. However, we're much further along towards that goal. And what we've done is we've switched to an outsourced chief investment officer that has total discretion over the endowment. And they see sustainable investing as part of their key business model. And they're very good at it, but we made the switch relatively recently, so in March of this year, 3 months ago. But we're taking 10% of the endowment and investing it proactively in ways that advance our mission, right? I suppose this will mostly be real assets and private equity. The rest of the endowment, we've divided it into 2 different sections, and I won't go into too many details, just given the amount of time we have here. But basically, because we're treated as a separate account rather than in commingled funds, they're able to screen out things that are directly contradictory to our mission. So just by asking these questions, and members of investment committees out there, just by raising these questions, and of course members of boards out there, what are we doing with this endowment? And the program work might be fantastic, as it is at RBF. But I think it's really important to think about how you can leverage that other side of what you have. And just briefly, in general, I think that's an important question for all individuals and all millennials to ask themselves is, what are the resources that I have in this